Welcome back to another mid-weekly outlook where I'll go over my main pairs that I'm looking for this week, which are fundamentally aligning with what I'm seeing and also technically. So basically, the dollar is the main currency that I'm eyeing, so I'm going to be mostly talking about the dollar. So what is right now like moving the dollar? So overall, we saw this move here into the upside, which was because Powell mentioned that a rate cut was in December was probably unlikely, right? So what was priced in? Well, a rate cut by 98% for December. And right now at the top, the percentage dropped to 63%, and right now it is back to 65%, right, of the probabilities of a rate cut. So if you would only look at that, then normally the dollar should rise, because if he says that it's far from likely to have a rate cut, then it's probably not a 65% for a rate cut, but a 35% or something for a rate cut, and then price would need to be a bit higher. Now there are obviously some other factors to that. So for example, we have the data coming out. So Powell mentioned that the rate decision will be based on the market, or like the data that will come out. Now at the moment, you guys know there's a government shutdown. So at the moment there is no data coming out. So if the government shutdown stays until the 10th of December, next FOMC meeting, then basically that would be almost 100% of a rate pause, because they have no data to cut rates, right? Or like a 90% chance. Now, let's say that the government gets back into it and the shutdown stops. Well, obviously, there is going to be data, and based off that data, there's going to be a rate cut or a rate pause. Now, that data, what do we expect of that data? Well, I expect it to be bad data. Why? Because from the government shutdown, already inside the government alone, there were a lot of jobs. I think 40,000 jobs that went missing or like just stopped. And I think the government shutdown also in the past has resulted in bad inflation numbers and bad, or not inflation numbers, sorry guys, but mainly labor market numbers and employment numbers. So I think that a lot of people lost their job because of it, and that's why I also think that the numbers will be bad as well. And I also looked it up, and previous shutdowns, that was the exact same thing. So right now for me it is, if the shutdown keeps on going until after next FOMC meeting, so December 10th, then we're bullish on the dollar, because then probably there will be a rate pause because they have no data to pick their rate cut. But let's say the shutdown will end before December 10th, then I personally think a bearish dollar. Why? Because of course the data, in my opinion, would be bearish for the dollar, resulting in a rate cut. So right now we have two options for me, either this, and that's upside all the way into the 102 level. Why? Because right now there's a 65% of a rate cut, so we have a big move still to fill if it is going to be a rate pause. So then this is a downside risk for me until the 3-monthly level, because it's already priced in 65% for a rate cut, which would mean that price should be around this level, because at this point we even had a 98% chance, so normally it should be right over here, but because we have this lows open and we have some equals as well, combining it with the technical alignment, then I'll see that this is a perfect level to trade towards. So these are my two options as of now. So with that, I'm now kind of hedging some positions, so buying the dollar and selling the dollar, so that in either result, right, I or stand on break even, or I get profits out of the market. So I'm mainly going for a bullish dollar. Why? Because I trust in the shutdown not going through. Now, if I see something switch, then I might close some positions and try to hedge more into dollar shorts, for example. Okay, so whilst I'm reading, I might just switch up some positions. Now, overall, what are my positions for the dollar shorts positions? Well, I'm looking at UC CHF shorts. What is that? Well, I'm possibly looking to go short from this liquidity right? Just a 1-to-1 into the downside, for example, something like this. If price pullbacks to the monthly level, maybe something like this, right? So that looks interesting for my short positions. Why is that? Well, because the Swiss franc is quite strong. So this is a nice expression of a dollar short. And what am I also looking to short? USD sin H, right? So USD against the Yuan. Well, I could see definitely this happen to take out the liquidity and then drop, for example. But overall, with the momentum, we could already short. So yeah, I think I might just be aggressive, take a big swing into the swing low. Just might open a lot right now, but we'll see. So that's another great expression in my opinion for dollar shorts. Also, another example for a dollar short is NZD/USD buys, which I quite like. So overall, what I could think that could happen is something like this to the yearly and then trade up higher to kind of see this and then boom. But of course, yeah, what can you see? You break into the downside. I think you now break the upside. Yeah, so you break the upside, creating this overall daily demand. And from here, you could also see upside. So NZD/USD are also quite nice buys, trading to the monthly level open and this liquidity. So boom, boom, and now seeing a little pullback. That's also a great expression of a buy reacting from the yearly level. Now, what are my hedge against dollar shorts here? So what are my dollar longs? Well, I'm looking at Euro USD shorts, right? So you now grab liquidity. If you look at the internal trend bearish, then boom, we have made the pullback, and now we could start to trade down lower after this liquidity. So Euro USD shorts look quite nice. Now, of course, we also have this level open, and that is probably going to get hit if the government shutdown ends and we have bad numbers, so that then the rate cut will probably happen, right? So with that in mind, I'm possibly going to be very aggressive with my stop loss here, because I don't want to get out all the way over here, because then already probably the decision has been made and I might just go out at this point, for example. So I'm just going to aggressively manage this. Again, these are fundamental trade setups, nothing much with the technicals. So we have GBP USD shorts as well. Why do I like them? Well, fundamentally, the pond is still bearish. You are also bearish on the 4-hour swing. Now, of course, you have some more liquidity above these highs, but after this liquidity, we already saw 2 breaks into the downside. You have the monthly level as well and the weekly level. So I think from here, we could definitely see some downside. And again, that's a great expression fundamentally together with the dollar longs. So we have EU and GU already. Of course, we also have USD CAD, which also beautifully aligns with the higher time frame. So you took liquidity at this high, you then took liquidity at the lows, created a very strong low at that quarterly level. Then you also have this bullish order flow. And now inside this demand, you just expect to continue to trade up higher. And also, I'm also expecting a weak Canadian dollar. So this again is a very nice expression of dollar longs. So that's also an expression of dollar longs. In my opinion, USD yen is also quite nice, but we're already overextended, so I'm not going to take any positions on that. And then we have one more expression for dollar shorts, which in my opinion is 80 USD. So I know that a lot of you guys are looking for longs here because you're bullish, but in my opinion, we have a lot of lows open. So if the dollar is going to be bullish, then it is a great expression as well to take out all of these lows here. And I think right now you also have this liquidity here at the monthly level, and it also seems like a nice level to start to trade all the way down lower to. So that's the reason of all of my positions here, or like I'm not yet into them, but these are the ones that I'm eyeing. And basically, as you can see, I'm dollar longs and dollar shorts, but I'm more exposed in dollar longs because I trust more in them. If I read that the shutdown is getting closer to an end, then I might switch to more dollar shorts, for example, right? But that's the power of hedging, because that way I limit my downside risk, and my upside risk is obviously just a bit normal, going to take losses but also wins, but we'll see. So then what I also think are some nice expressions for this week are still Euro NOK shorts, because I'm looking at some upside for the NOK. And technically, again, like you take out liquidity, boom. Again higher, take out liquidity, boom. And you still need to get down lower, and you have all of these bad lows. So I'm looking to take them all out. So here, what do you see? Well, we take out liquidity above this high monthly level. From here again, we can short down lower together with the overall order flow. So that looks also a nice expression. How could you trade this? Maybe if you see this, stop above this high entry here. Now, the only thing with that is you could see one more swipe to the quarterly and then down lower. But I still think that's fine because you take out liquidity already, react from monthly, and you could also just continue the order flow down lower. Or you could look for the 1 hour time frame to try, like now you took this liquidity and probably see something like this. Then at the end of Asia, seeing the low getting broken, 1 hour fractal, and then boom, try to short with a stop loss above your high, for example. That to me looks like something very interesting actually. Now what do I see is that this here is your dead cap candle. So you guys also know you have liquidity above these highs, and these are all descending, right? So all weak highs. So I am going to wait, and as you can see here, also bouncing from the monthly. I'm waiting to trade up higher towards this liquidity to that quarterly level, and then at that point probably try to enter again in shorts down lower. So let me set an alert at these liquidity highs, this one here, this candle, and then basically try from there to then again trade down lower. So Euro NOK for me is quite nice. Of course, Euro Swiss is very, very bearish. It has been down lower, breaking this trend line. No actual entry for me on that pair. So I already explained all of the dollar setups. And then, of course, I also am looking at some CAD Swiss continuations. Now, why? Because the Swiss is bullish and the CAD is bearish. The only thing I do not like about these shorts is that we have liquidity above all of these highs with an open supply. So that is what is causing me to hesitate on this setup. And I think this and then shorts is way more A+. Let's say you now see more liquidity getting grabbed and then again downside. Well, then I think that we're not going to be trading up higher to take out the liquidity, and then we could follow the order flow again down lower. So that's what I'm waiting for. We guys, yeah, you know Swiss yen is bullish. You guys also saw the trade breakdown from this long setup here, and it's just the fundamentals are the same from that same setup, so you can just keep on longing. Now in my opinion, I want to see this low get taken out and then long, but it didn't happen. So what am I now waiting on? Just a retracement, and from that monthly level, as simple as that, just long again, because this is just overall very, very bullish. So that's basically my outlook for the mid of this week. I think it was a great expression of how the fundamentals work and how you can hedge with different fundamentals in your mind. If you guys also want me to make more videos about the fundamentals without me showing it on the chart, that's something I would like to do. More talk about the economics, the fundamentals, just to like give you guys some information and help you guys with that educational from the fundamentals. And from there, you guys can just see if you like it or not. Okay, so see you guys in the next one. Good luck with trading.